Yes, people, a very, very happy evening, all of you. Thank you so much for such a low energy. One more time, can we do? Happy evening, people. Much better. Thank you so much. So, guys, we're doing this chapter called as Rules of Debit Credit and also the accounting procedure. In the last class, people, we have completed our discussion on the concept of traditional classification. Today, we'll head forward to the next classification, which is called as modern classification. Traditional classification is also called as golden rule or traditional approach, whereas modern classification is called as modern rule or American approach. Modern rule or American approach. Now, sir, using traditional classification, if I'm able to do all the journal entry, why do we have another method? I'm sorry to say, using golden rule, using traditional classification, you are not in position to decide debit and credit for all the scenarios and circumstances. Hence, to overcome such challenges and difficulties, we have come out with a new rule called as modern rule. Means using golden rule, we were not able to decide what to debit, what to credit for multiple types of transactions. Hence, we had a struggle to decide what to debit and what to credit in those situations. Hence, to overcome such challenges, we have come out with a new classification called as modern classification. So, what does modern classification says? Modern classification, also called as modern rule, also called as American approach, also called as accounting equation approach. This rule says that you take any transactions, in that transaction, you take any account, all the accounts will be classified either as expenditure or income or liability bar capital or asset. You take any account, you will be able to classify them under these 5 categories. If that is the case, then why do we need personal account, real account, nominal account? Why classification based on personal, real, and nominal? When these are the category, why don't you name this itself as classification? So modern rule says that there is no more classification of personal, real, and nominal. We will classify them under what category? Asset as one category, liability second category, capital third category. Now income and gain put together has become revenue. Income and gain put together is called as revenue. Expenditure is called as expenses. So in total, we have 5 category. No, that 5 category itself will make classification. So now, once you come to the recording stage, the first step of recording stage is identify the accounts involved. Now, once you decide the accounts, you will classify them as per modern rule. So modern rule ka classification is what? Either the account is, first is asset, second is liability capital, third is revenue, fourth is expense. Idan classification. Once you classify them, apply the rules of debit credit. Which rule? Apply modern rule ka debit credit ka concept and decide what to debit and what to credit. Got it, not got it? So what does the rule says? How do we apply it? Now here, there is no more debit what comes in, credit what goes out. There is no more debit the receiver, credit the giver. There is no more debit all expense and losses, credit all income and gain. Here the rule completely changes. Approach of the rule is different. Now focus. Any account that you take, you'll either classify them as asset or liability or capital or revenue or expenses. So in total, how many classification? 5 classification. After this, you have to decide what is the nature of balance. What is their nature of balance? Ippodike, for now, it might seem as if you are by hearting this. Yes, you have to by heart right now. Once you come to ledger topic, that time I'll teach you what is the meaning of debit balance, what is the meaning of credit balance. That time I'll teach you why asset is given debit balance and why capital is given credit balance. But today, I'll not be able to give you the logic. When can I give the logic? When I do the ledger. As of now, today, you remember that asset will always have what balance? Asset will always have debit balance. Liability capital will have what balance? Credit balance. Revenue will have what balance? Credit balance. This I can make you understand. Why is revenue credit balance? Tell me people, in golden rule, all the revenue, income, gain will go where? To which house? Nominal house. What is the rule of nominal house? Debit all expense and losses, credit all income and gain. So revenue and gain by default are what items? Credit items. So any item that you credit, that becomes credit balance. Any item that you credit becomes credit balance. Now, wholeheartedly you will not understand. Why is like that? You will not understand now, because when you do ledger, that time I can give you a better picture as to why a credit item is called as credit balance. You have to give me time till ledger. Got it, not got it. I can do right now, but nothing will understand. Even if you try to understand, it will be a little vague only. So rather, I will wait, and when the right time comes in the ledger, I'll make you understand what is the meaning of credit balance and debit balance. Got it, not got it. So why is revenue credit balance? Because as per nominal ka rule, credit all income and gain. Got it, not got it. So this modern rule is derived based on what? Traditional rule only. What is the root of modern rule? Modern rule, the base another. Traditional approach only. Golden rule is the base for modern rule. Got it, not got it. So as per golden rule, gain, income, revenue are all credited. Hence we call them as credit balance item. We call them as credit balance item. Got it, not got it. As per nominal account, expenses and losses, what do you do? Debit. So those are called as debit balance item. Those are called as debit balance item. Yes or no? Tell no. Okay. So I am telling all of you, or asking all of you, as per modern rule, how many classification? As per modern rule, how many classification? 5 classification. First is asset. Second is liability. Third is capital. Fourth is revenue. Fifth is expenditure. Any problem? No. Asset will always carry what balance? Always debit balance. Always debit balance. Why? I did not explain yet. When will I explain? In the ledger topic. Liability and capital, what balance? Always credit balance. Always credit balance. Revenue, what balance? Debit all expense and losses. Credit all income and gain. Apana credit balance. Okay, not okay. Expenditure, what balance? Debit balance, because debit all expense and losses. So far clear? If this is clear, 50% rule over. 50% rule over. Remaining 50% can I focus? Hell no. No. Now here, there is no more whether asset is coming in, going out, receiver, giver. There is no concept. Here the concept is increase method and decrease method. What is accounts? Accounts is all about debit and credit. Debit and credit. What is debit credit? It is nothing but plus and minus. Our plus and minus is nothing but increase and decrease, add and less. Yes or no? So ultimately, the entire accounting, what you're doing, what are you doing at the end? Addition, subtraction. Addition, subtraction. That addition, subtraction, the wrapper name is what? Debit, credit. So ultimately, your entire accounting is about what? Addition, subtraction, addition, subtraction. So they're telling that no more debit the receiver, credit the giver, debit what comes in, credit what goes out. Now the perspective will change. Now what is the perspective? If I buy any product, I'm paying money, cash. Cash is going out. Yes or no? If I keep on paying cash, my cash balance will increase or decrease? என்கிட்ட கையில 1 lakh இருக்கு. How much இருக்கு? 1 lakh. In that I pay 10,000. The moment I pay 10,000 from this, what is my balance? 90,000. So by paying cash, by giving asset, my asset balance reduces. My asset decreases. Yes or no? So now, no more point of view is receiver, giver, coming in, going out. Now the point of view is increase or decrease. So asset in the business is increasing or decreasing. Liability in the business is increasing or decreasing. Capital in the business is increasing or decreasing. Expenses in the business increasing or decreasing. Income in the business increasing or decreasing. So everything is now from what point of view? Increase and decrease point of view. Got it, not got it. So in business, if asset is increasing, now addition will happen only now if you give debit. I sold the product. I got 10,000 rupees in hand. Up my cash balance is increasing. Cash is asset. To increase asset, to add asset, I need to give a debit. Got it, not got it. Now listen. Yes, I sold goods for rupees 10,000 in cash. Let me focus on cash first. What is cash? It is asset. Now, if I keep on selling the product, if I keep on receiving the cash, what is my cash balance going to happen? My cash balance is going to increase. Yes or no? Increase another add. But here in accounting, you cannot increase. You cannot decrease by doing plus and minus. Plus and minus is prohibited in accounts. A plus and minus can happen only with the help of debit and credit. So here, should I debit or credit? You have to debit, because asset balance ka nature is what? What is the nature of asset? It is debit balance. Who is the hero of the asset account? Debit is the hero. Who is the hero of asset family? Debit is the hero. More and more hero comes means debit will increase. So to increase the hero ka reputation, we have to debit. Got it? Not got it? Tell no. Increase asset. To increase asset, debit. Who is the hero of this family? Asset is house. Who is the hero of the house? Debit balance. But debit balance, like, who is the hero? Debit is the hero. So to increase to increase cash, to increase asset, what should I do? Debit. To decrease asset, credit. Now, initially, this will look tough. Why? Because you are already used to golden rule. You're already used to golden rule. So you're very comfortable with that. So when you're doing something new, it'll be little difficult. But with the practice and revision, this will become easy. A point will come where you will feel this more comfortable than golden rule. Had I done the modern rule first, then golden rule, you will be more comfortable with modern rule first. Then golden rule have been tough there. But since I've done the golden rule first, you are very comfortable with it, no? So you're feeling that is easy and this is tough. But I'm telling you, both are easy. It's just a matter of time and matter of practice. So be patient with me. Whatever I'm saying, properly follow, you will understand it. Okay, not okay. Simple thing. Asset is what balance? Asset is what balance? Debit balance. So in the business, if asset increases, to add, I need to give a debit. In business, if asset decreases, cash paid, cash balance reduced, I have to give a credit. So debit is acting here as plus and credit is acting here as minus. Got it? Not got it? Now coming to liability and capital. In liability and capital, who is the hero of the house? Credit balance is the hero. Upon the house or the balance increase, what should I do? Give a credit. Very good. So to increase the liability, to increase the capital, I need to give a credit. To decrease the liability, I have to give a debit. So here, plus is acting as credit, minus is acting as debit. That's why I told you, debit and credit is nothing but plus and minus. If it is plus and minus, why are we not using plus and minus? Because debit will act as sometime plus, sometime minus. Credit will act as sometime plus, sometime minus. So it becomes very confusing with plus and minus, what to do, what not to do. So instead of the word plus and minus, what are they teaching us? Rules of debit and credit. How to debit, when to debit, how to credit, when to credit is a rule that has been taught to us. Clear or not clear? Likewise, if I come to revenue, revenue ka hero is who? Credit balance. To increase revenue, what should I do? Increase na, I have to give a credit. To decrease revenue, debit. Expenses, who's the hero? Debit balance is zero. To increase expense, add debit. To decrease expense, minus credit. Got it? Not got it? Tell no. Any difficulty? Online people, any difficulty? Tell no. No problem. Can I continue? Okay. This rule is clear. I don't want to spend too much time on rules. Can we start doing sums? Once we do the sums, no, when we apply, you will be in better position to answer. So last class, we have completed question number 3, if I'm not wrong. 3 done? Yes. 4th, I will do at the end. First, I want to do 5. Question 5. It says that analyze the following transaction. Analyze the following transaction. State the nature of accounts as per modern rule. State which account will be debited, which account will be created on the basis of modern classification. So here, no more personal, no more real, no more nominal. Got it? Not got it? Here, what is classification? Only 5 classification. Asset, liability, capital, revenue, expenses. Got it? Not got it? Now, Dinesh started business with cash. My question to all of you, is this a transaction or not? So this is a transaction. Why? Because this is involving exchange of cash, transfer of cash between 2 parties, in which one is Dinesh, another is business. Dinesh is third party, business is business. It's a transaction. Second, in this transaction, F is involved. F is what? Financial values involved. And this is happening in the course of business. So this is a BFT. This is a BFT. Second, is this in money measurement form? Is the money measured properly? Yes. 5 lakh is measured in terms of money and it is in INR. So money measurement also taken care of. Third is recording. In the recording stage, what is the first step? Identify the accounts involved. So in a transaction, there can be how many accounts? Minimum. Minimum will be 2. Maximum, unlimited. It can be anything. 5, 10, 15, 20, 30, unlimited. Please tell me, people, in this, how many accounts are there? 2 accounts. One is cash account. I need to capture the data of the cash. Cash. Next is Dinesh ka capital. Why do I need to remember Dinesh ka capital? Because this money what Dinesh gave today, no, in future I have to repay the money back. Once the business is closing in future, business has to remember to repay this money back to the owner. Got it? Not got it? So I need to remember the liability. I need to remember the liability. So here 2 accounts are created. One is Dinesh ka capital account. Second is cash account. Let me focus on cash first. As per modern rule, what is the cash ka classification? Classify the nature of accounts. Cash ka, what is classification? It is asset. As per which rule? Modern rule. Now here, please tell me, if Dinesh keeps on giving the cash to the business in form of capital, in business, the cash balance will increase or decrease? Cash balance will increase. Asset balance is increasing. Okay. To increase asset, what should I do? Give a debit. Nee debit padnada add agum. If you credit here and come, it will minus. So here, debit is acting as plus. If you do not debit it, if you by mistakenly credit cash apdina, the cash balance will reduce. Got it? Not got it? Because the ledger is drafted in such a way. This is cash account. Cash account. Debit what comes in. Debit what comes in. So in cash account, 5 lakh rupees, if I debit only, the balance will increase. So when I say to increase the asset, give a debit, this is coming from what rule? This is coming from what rule? Golden rule. This is coming from which rule? Golden rule. Tell me, people, in golden rule, cash is what? Real account. What is the real account ka rule? Debit what? Comes in. Debit what? Comes in. In means what? Increase. In means what? Increase. To increase, in golden rule, what do I do? Debit. So in golden rule, if you debit, in modern rule also you have to debit only. There you say I will debit. Here if you say credit aprina, it will be wrong. Rule will be same only. Whether you follow this route or that route, rule will be same. Got it? Not got it? So all this debit and credit is derived from which rule? From golden rule. But this is a better version of the golden rule. The golden rule approach is very narrow approach, whereas here the approach is very broad approach. How it is broad, you'll understand in the days to come automatically. So here, the asset ka balance is keeping on increasing. To increase the cash balance, I have to record the cash on debit side. Upon the account should be debited. You have to debit cash account. Got it? Not got it? Tell no, loudly. Now, next is Dinesh ka capital. Dinesh capital, as per modern rule, what classification? Capital classification. Don't say liability. Separate classification is given for capital, which is capital classification. So please tell me, if Dinesh is keeping on giving the capital continuously every day, my burden of paying the capital will keep on increasing. My burden of paying the capital keeps on increasing. To increase capital, what should I do? Credit. Because capital is credit balance item. To increase capital, I have to give a credit. Got it? Not got it? So coming back to the answer. Here the accounts involved are cash and capital. Cash is asset. Here, if I keep on getting cash, my cash balance will increase. Cash is asset balance. To increase asset balance, I have to give a debit. Capital is capital balance. Capital keep on increasing. If more and more capital I get from the partner, capital ka balance will increase. To increase capital, give a credit. So both are acting as plus plus here. Because both are increasing. Cash also increasing, capital also increasing. So both are increasing. So both are adding. But in that one is debit and there is credit. Got it? Not got it? Tell no. Online people, comfortable so far?
Yes, sir.
Okay. Now, borrowed from Naresh. Borrowed from Naresh. What did you borrow? What did you borrow? Nothing mentioned means money borrowed, cash borrowed. So borrowed cash from Naresh. So tell me, people, borrowed cash from Naresh means what? What does it mean? We have taken loan. The business has taken loan from Naresh. Who's Naresh? Some random third party. He can be brother of Dinesh. He can be father of Dinesh. He can be uncle of Dinesh. He can be friend of Dinesh. He can be anybody. But Naresh is not owner. Naresh is not owner. Apana, he's some random third party. He's some random third party. External party. Got it? Not got it? From that external person, we have taken a loan of 1 lakh rupees. This 1 lakh ka loan, can I keep with me forever? Can I keep the loan with me forever? No, I have to repay back in future. In one future date, I have to repay money back to Naresh. Apana, this money, what is coming inside, it is coming with the pressure to pay in future. Apana, in this transaction, how many accounts are getting affected? Okay, before that, first of all, is this a transaction? Is this a transaction? Yes. This is a transaction which involves transfer of funds. Naresh is transferring funds from his account to business account. Business account. Okay, wow. So it's a transaction. This transaction happening between two people. One is Naresh, second is business. So this is a transaction which involves money, finance, and this is happening in course of business. This loan was not taken for personal purpose. This was taken for business purpose. Upon this is a business financial transaction. Okay, not okay. Can I say this is already measured in terms of money? Because 1 lakh is money measured value, money measurement value, and it is in INR. Upon it is measured in terms of money. Now tell me, people, in this BFT, how many accounts are involved? How many accounts are involved? One is cash account. One is cash account. Second is loan by Naresh. Loan by Naresh. Got it, not got it. So one is cash account. Second is loan by Naresh account. LBN, loan by Naresh account. These are the ledger name. In the account I'll open two accounts. One is cash account. Second is loan by Naresh account. If you just write Naresh income, you'll not understand. If you just write Naresh income, you'll not understand. If I write the heading as loan by Naresh, means it is easy to understand. Oh, Naresh gave the loan to us. Loan is given by Naresh to business. So the ledger name is going to be loan by Naresh account. As per modern rule, cash is what classification? Cash is asset. Here, the cash balance is going to increase or decrease. If Naresh will keep on giving, if Naresh is keeping on giving the cash to us, in business, my cash balance will increase. Asset is what balance? Asset is what balance? Debit balance. To increase asset, what should I do? Give a debit. So cash will be debited. Cash will be debited. So cash is asset and asset is increasing. Hence, we are debiting 1 lakh. 1 lakh is put in the debit column. Next is loan by Naresh. What classification? What classification? Loan by Naresh. This money I have to pay to Naresh in future. Anything that I have to pay to someone in future is liability. Anything that I have to pay to someone in future is liability. Tell me, people, touch your heart and tell me, do we not understand the meaning of asset, liability, capital, revenue, expenses in the basic accounting terms? We discussed what is meaning of asset, what is liability, what is capital, income, expenses. Yes or no? You come back here, they're telling the meaning of asset. What is asset? Asset are those accounts which relate to the economic resources of the enterprise. Didn't I use this word resources? What did I tell you? Asset means what? It should be a resource. First condition. Second, on that resource, we should have ownership or control. And this resource I'm going to use in the business to generate FEB. FEB stands for future economic benefit. I need to earn money. All these three put together is called as asset. Got it? Not got it? This is a little bit more technical. In simple language, what is asset? Sir, anything that I own in the business is asset. In business, whatever I own it, land, building, plant, machinery, stock, cash, I own it. It's my asset. Or anything that I receive in future is asset. From debtor, I have to receive money in future, asset. I gave a loan to my staff. From that staff, I have to receive the money back in future. That is also asset. In bank, I've deposited money. So in future, I have to receive money from bank. That is also asset. So in 11th standard point of view, no need to remember all this. 11th point of view, what will you remember? What is asset? Anything that I own in the business is asset. Or anything that you expect to receive in future is asset. Either matter remember pannunga. Okay, wow. Now coming back. Here, loan by Naresh is liability. Why? Because this 1 lakh I took from Naresh with the intention to pay in future. Anything that I pay in future is liability. Yes or no? So tell me, people, if I keep on taking loan from Naresh, my liability pressure will increase or decrease? The loan vaangite irda now. Pressure ero. Pressure to pay money in future will keep on increasing. To increase liability, what should I do? Give a credit. Because liability is what balance? Credit balance item. To increase liability, give a credit. Appada liability gets added. Sir, I'm taking one more loan of 1 lakh rupees from Naresh. What happens? Again, give a credit. So, first time credit 1 lakh. Second time credit 1 lakh. So, what is my total now? 2 lakh. Total is 2 lakh rupees. So, in liability item, if you keep on crediting, it keeps on adding. So, credit is acting as add. Got it? Not got it? Hell no. This will become even more clear when we do ledger. After journal, when we do ledger, no, you'll get a beautiful clarity of what is the meaning of debit and credit. I'm telling you. Trust me. Now, loan from Naresh is a liability, and this liability will keep on increasing. If I take more and more loan, I have to repay more and more loan in future. So it is increasing my liability. And to create liability, I have to give a credit of 1 lakh. Okay, not okay. Next, purchased furniture for cash from Raj Furniture House. I have a lot of questions here. Who's running this business? Who is running this business? I want all the online people to keep a video switched on. No video, no class. No video, no class. I want everybody to keep a video switched on. Mukesh video, Shreyashri video, Suranjana video. No video, no class. Now, my question to all of you: anywhere in the question have they mentioned that Dinesh is into business of buying and selling furniture? Online people, anywhere in the question have they mentioned that Dinesh is into business of buying and selling furniture? Have they mentioned? No. Apana, this furniture what we are buying, I'm not buying with intention to sell. But what is intention? To use the furniture. Will I use the furniture only for 1 year, or will I use it for more than 1 year? More than 1 year. Apana, it becomes your asset. What is asset? Asset is nothing but, okay, in simple 11th language, what is asset? Anything that I own in the business is asset. In the furniture, na maangirke. Yaar owner. I'm the owner. So it is my asset. Got it, not got it. Technical point of view, what is asset? It is a resource. Is the furniture resource? The chair what you're sitting is my furniture. It's my resource. It's my resource. Yes or no? On this resource, do you have control? I have control. I have control. So control and ownership is with me. This furniture I'm using to generate future economic benefit. And this furniture I'm using for more than 12 months. More than 12 months. Apart from these 3 conditions, if this one more 4th condition satisfied, then this furniture becomes your tangible fixed asset. It becomes tangible fixed asset. Got it, not got it. Apo, in this transaction, how many accounts should I open? Purchase account will not come because I'm not in the business of buying and selling furniture. Furniture is not my goods. Had the furniture been my goods, if I'm the trader of the furniture, apana, I would have opened purchase account. But I'm not the trader of goods. Apo, this asset, I'm going to use it. So this furniture should not go to the purchase account. This furniture should go to furniture account. Got it, not got it. Okay. So one account is furniture account. So why furniture account? Are donkey fellow, I have to keep a list of all the assets in my books. No. If I don't make a note that how much furniture I have, I'll forget. No. Because I'm a Gajani. We'll forget it. So we have to document how much furniture is there. Hence we have to open furniture account. Next, what account? Sir, Raj Furniture House account will open, sir. Raj Furniture House account will open. Why? I will open his account when if I purchase the furniture on credit. Appa, I need to remember his name because I have to pay the money to him in future. Now here, cash is paid? No. If cash is already paid, do I need to remember the party name? Not required. So what is the second account that I should open? Cash account. Got it, not got it. So the 2 accounts that I have to open, is furniture account and cash account. Let me talk about furniture. As per modern rule, furniture what classification? The online people, what is wrong with you? Yeah, I'm telling from that time, keep the videos on. Poor fellow I am. Pavam. Why? Very good. Now, okay. Furniture, what classification? Asset. Why it is asset? Why is it asset? Because we own it. Asset is what balance? Debit balance. Now here, this furniture ka balance, asset balance is increasing or decreasing? So today I purchased furniture for 20,000. Before purchasing furniture, in my business, the furniture was 0. When I purchase furniture, its value increased by 20,000. Tomorrow, if I buy another furniture for 30,000, the value will keep on increasing. Apana, if I keep on buying more and more furniture, its value in my business will keep on increasing. So to increase asset, what should I do? Debit. To increase asset, what should I do? Debit. Got it, not got it. Okay. Next is cash. Cash is what classification? Cash is what classification? Online people, open even the respond. Cash is what classification? Asset. Asset is what balance? Debit balance. Here, we are purchasing furniture for cash. We are paying cash. If I keep on paying cash, my cash balance in business will come down, decrease. To increase asset, debit. To decrease asset, credit. Got it, not got it. So debit is plus, credit is minus. In case of asset, in case of asset. So furniture is asset. To increase, that is add asset, debit. Cash is asset. To decrease, minus asset, credit. Any problem? Any difficulty? Yes, it'll come with practice. Don't panic. Anything, if you do regular practice, you will get it. You have to just concentrate in the class and just follow what I'm saying. Entire next chapter. Next chapter is journal. Full of journal is application of golden and modern rule. 10 classes we'll do on journal. How many classes? 10 classes. Pakka perfect will become. It's my promise. So have patience. We have a long way to go. क्या चाहिए देखो? Purchase. Now next is fourth one. Purchased furniture from Delhi safe. Since when Delhi is safe? दिल्ली कब से सेफ हो गया भाई? ये स्कैम चल रहा है अपने साथ. दिल्ली सेफ. Delhi is not safe. Now, purchased furniture from Delhi safe. Who's Delhi safe? Supplier. Supplier of the furniture. Got it, not got it. So here, is this a BFT or not? So it's a BFT because this transaction is taking place between business and supplier for exchange of or transfer of goods. Correct or not correct? For Delhi safe, furniture is goods only. No. For us, furniture is asset. For Delhi safe, it is goods. Okay. Now, how many accounts will I open here? How many accounts will I open here? So one purchase account, sir. Purchase account will open. Only people are saying purchase account. Vidhi is saying, yes, sir, will open, sir. Jaydarshi also says, purchase account, sir, will open. Pritesh also saying, open, sir, furniture. Oh. Karthik also says, open furniture. Oh my God. Pavan says, no, sir, purchase open, purchase. Purchase, Pavan? Purchase will not come. Why? Because furniture is not goods. It is asset. Only goods will go to purchase account. Only goods will go to purchase account. Had we been the dealer of furniture, then furniture would have been my goods. And all the goods that I buy will go to purchase account. But here the furniture is asset. So purchase account will not come. So one I have to open furniture account. One I have to open furniture account. In the question, they have not mentioned whether payment is done or not done. What should I assume? Payment done or not done? If question is silent, it means payment not done. Upon this purchase is credit purchase. The asset is purchased on credit. So this is credit purchase transaction. Got it, not got it? Okay. Don't think that only goods can be purchased on credit. No. Even asset can be purchased on credit. Goods purchased on credit will go to purchase account. Asset purchased on credit goes to asset account. Got it, not got it? Now, you said correctly, furniture account I have to open because I need to record the asset. Whatever I own it, I have to record it. One more account, what should I open? Delhi safe. Why? Because we have to remember to make the payment to Delhi safe. When? In future. Anything that we pay in future is liability. So 2 accounts has to be opened. Yes, Kana. Okay. Very simple, Kana. In question number 3, what did they say? Yes, online people. The question what people are asking is, sir, how do I know whether this is cash transaction or credit transaction? So I'm telling you, in question number 3, if you say no, in question number 3, if you see no, they're telling that furniture is purchased for cash. Means what? Cash paid. Apana, this is cash transaction. In the second part, they are not telling anything about whether cash paid or not paid. So whenever the question is silent, whether cash paid or not paid, we'll assume that cash transaction, illa. This is credit transaction. This is credit transaction. Got it, not got it? This is how you identify. So, my question to all of you, how many accounts should I open now? 2 accounts. One for furniture. Second for Delhi safe. Furniture, tell me people, what classification? Online people, no response. Furniture, what classification? Asset. Asset is what balance? Asset is what balance? Debit balance. Here, furniture balance, asset balance is increasing or decreasing? If I keep on buying more and more furniture, asset ka balance will increase. To increase asset, you have to give a debit. No discussion privately. आगे मत जाना, मेरे साथ चलना. Delhi safe. Delhi safe. Supplier. To whom I have to make the money ka payment in future. Delhi safe is a supplier to whom I have to pay the money in future. So for me is a liability. Liability is what balance? Credit balance. If I keep on buying the goods on credit from Delhi safe, I have to keep on paying the liability in future more and more. So this transaction is increasing my tension, increasing my liability. So to increase liability, give a credit. To increase tension, give a credit. Got it? Not got it? Pratik sir becomes tensed when student don't answer. So Pratik sir BP should be rising up, Nina. Student should not answer. If Pratik sir BP has to come down means student should answer. Got it? Not got it? No, you are here to control my BP or increase my BP. Increase பாரு increase சொல்ல பாரு. டேய் நான் increase BP படிச்சு நான் போயிடுவேன். நீ என்ன பண்ணுவ என்ன இல்லாம? 12th யார்கிட்ட படிப்ப? வேற டியூஷன் டீச்சர் பார்த்துட்டுமா உனக்கு? Now, is this clear? Furniture asset increase debit. Delhi safe liability increase credit. Now what is it out? Somebody call me sir. You mean in ledger name, accounts का name? Are you talking about narration or are you talking about किस चीज का पूछा डिस्क्रिप्शन के लिए? So account name you're talking, no? Correct. No, here Delhi safe is sufficient. So what he's telling is, sir, here the ledger name is there, no? Delhi safe. Should I write furniture purchased by Delhi safe like that? Not required. See, all these are accounts ka name. All these are account ka name. Account means what? Heading. Cash account, capital account, loan from Naresh account, furniture account, Delhi safe account. Delhi safe is supplier name. For example, Fortune's Fun Learning Academy. That ledger name is, in ledger name FFL alone, you'll write it. If I'm buying goods from Reliance Industries Limited, so I'll record the ledger name as Reliance Industries Limited. Got it? Not got it? So name of the company, name of the entity alone, if you write, more than sufficient. Can I continue now? Now, online people, can I continue? To increase my BP, online people, switch off the video. To decrease my BP, switch on the video. What do you want now? My BP to raise or decrease? Now, purchased goods for cash. I'm not able to understand this transaction only. This is confusion. I'm not able to understand whether this is credit transaction or cash transaction. Tell now, which transaction is? For cash means cash transaction. Okay. So I'm buying something for cash. What am I buying for cash? Goods or asset? Goods. Oh. But goods will go to furniture account. No, it goes to purchase account. So you're supposed to open purchase account. So one account is purchase account. Next account is goods account, sir. Goods account. Goods you will never open during the year. Always goods ka ledger will open at the end of the year in the final account stage. So cash account and purchase account. Tell me people. As per modern rule, purchase is what classification? It is expenditure classification. Expense is what balance? Debit balance. Now here, if I keep on buying the goods in cash, my expenses will keep on increasing. To increase expenditure, I have to give a debit. Got it? Not got it? Because the hero is debit balance. To increase hero, I have to give a debit. Clear or not clear? Next is cash. You know by heart. Cash is asset classification. Asset is what balance? Debit balance. Here cash balance is increasing or decreasing? If I keep on paying cash, my cash balance will decrease. So to decrease asset, give a credit. Hero is who? Debit balance. To increase hero, debit. To decrease hero, credit. Okay, not okay. So purchase is expense. Expense is increasing. To increase expense, debit. Cash is asset. Asset is decreasing. To decrease, credit. This is debit column. This is credit column. Okay, not okay. I have a doubt. My doubt is DR stands for what? No. In India, DR stands for what? Online people. DR stands for debtor. Say. DR stands for debtor. Say. No? Are you sure? Yesterday, 12th class. Yesterday, 12th class. One girl said, cash account debtor, sir. Nama mood out. New girl. Now only she joined. She doesn't know, no. Last நடுவில் ஸ்டாப் பண்ணி அந்த தாத்தா பாட்டி பார்த்தல போட்டோ ஞாபகம் இருக்கா? சார் லுக் அட் பேசுவலி பக்கத்து மாமி யாருன்னு தெரியாது. அந்த போட்டோ காமிச்சு திருப்பி பாடம் நடத்துறேன். I took 5 minutes to explain. DR stands for debit. Yesterday evening, same time, இதே டைம் தான் நேத்து. டென்ஷன் ஆயிடுச்சு எனக்கு. பிபி எல்லாம் நெக்ஸ்ட் லெவல். டெட்டார் சொன்னோடனே எல்லாம் பிபி ரைஸ் ஆயிடுச்சு எனக்கு. ஐயோ, you will not say all that, no? DR stands for debit. Very good. Oh, debut. Latin language. Now, purchase goods from Mahesh. Oh. Mahesh has come here. Purchase goods from Mahesh. Credit transaction or cash transaction? Sir, paisa paid, not mentioned. So this is credit transaction. Since we are buying goods, I have to open purchase account and Mahesh account. Goods account will never come. Purchase is expenditure. Expense is what balance? Debit balance. Here if I keep on buying goods, my expense will increase. To increase expenditure, debit. Mahesh is technically called as creditor. Creditor comes into what classification? Liabilities. Liability what balance? Credit balance. If I keep on buying more and more goods from Mahesh, my tension will increase because that much money I have to pay in future. So to increase liability, what should I do? Give a credit. So if liability increases, give credit. Got it? Not got it? Online people, tell no.
Yes, sir.
Purchase expense increase debit. Mahesh creditor, liability increase credit. So when I started class today, little bit difficult you had, but now comparatively you're feeling little better. Not 100% better, but little bit better. With more practice, 100% also will become better. Now, sold goods for cash to Karim Bhai. Sold goods for cash to Karim Bhai. Cash transaction or credit transaction? Cash or credit? Cash transaction. Very good. So cash account has to be opened. Okay, not okay. Next is goods, sir. Goods transaction will open. Goods account will open. No. Sir, Karim Bhai transaction. Karim account. No. Why not Karim account? Sir, already money received from Karim. I don't need to remember Karim. Had this been credit transaction, Karim Bhai is very important for me. That time I'll open his account. Apana. One is cash. Second is sales. Two accounts will open. One is sales account. Second is cash account. Sales is asset, sir. Asset is my advantage. Powerful. Sales is asset. Say no. Prathik, Sajaya, Pavan, say asset. Sale is asset. Pritesh, Tejas, Surinjana, say asset. Sales is asset. Say no. What is it? Income. Income means revenue. Revenue is what balance? Say credit balance. This credit balance. Say no. No is saying no. But yeah. This is how I'll try to confuse you. You have to be careful. People don't answer from their mind. They answer based on my tone. If sir speaks like this, then ulta answer will come. Revenue is credit balance. Revenue is credit balance. Here, if I do more and more sales, more goods I sell, my revenue will increase. To increase revenue, I have to give a credit. Got it, not got it? Okay. Next is cash. Cash is asset. If I keep on doing more and more sales, cash will come in. Cash will come in means cash balance will increase. To increase asset, debit. Got it, not got it? Somebody said credit. Who said that? Somebody said credit now. Cash. कौन बोला? Now, cash asset increase 25,000 debit. Sales revenue increase 25,000 credit. Both are addition item. Now, sold goods to Sham on credit. First of all, what transaction is it? Cash sale transaction. Tell. Cash sale transaction. No, it is credit sale transaction. Credit sale transaction. Okay. How many accounts in this transaction to be opened? Sir, sale account. Second is Sham account because I need to remember to collect money from Sham. So I have to make a note of it. If I don't make a note, I'll forget because I'm a Gajani. So sale is revenue liability. Yeah. Who said liability? Sham liability कैसे हुआ? सब गलत गलत बोल तू. Sale is revenue. Revenue is what balance? Credit balance. If I keep on doing more and more sale, my income will increase. To increase income, credit. Okay, not okay. Who Sham? Who Sham? Customer. Customer. From whom we have to receive money in future. So technically it's called as debtor. 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 Debtor is that person from whom I have to receive money in future. So anything that I receive in future is asset. Apo Sham is asset. Asset is what balance? Debit balance. If I keep on selling more and more goods to Sham, I have to receive more money from Sham in future. So my asset balance will keep on increasing. If I keep on selling more and more goods to Sham, the money that Sham has to pay me will keep on increasing. My asset ka balance will keep on increasing. So to increase asset, give a debit. Sham asset. Sorry, previous one. No, here it is. Sham. Sham asset increase 30,000. Sales revenue increase 30,000. Got it? Not got it? Hell no. Sham account. I'm doing in statement format. Like petty boss. What is the petty kada boss? Who's that? Buy kada. Petty shop. Sham account. Okay. I'm recording this. I have sold goods to Sham. I have sold goods to Sham. Goods worth how much? 30,000. So 30,000 I added to Sham account. This addition happened because of debit or credit. Only if you debit Sham account, this balance will increase by 30,000. Yes or no? But debit is acting here as plus. Clear or not clear? Now, in the next transaction, the ninth transaction, they're telling that cash received from Sham. Cash received from Sham is 20,000. Out of 30, how much have I received? 20 I have received. Got it, not got it. How many accounts should I open here? One is cash, second is Sham. Cash is asset. Asset is debit balance. If I keep on receiving money from Sham, my cash balance will increase. To increase the cash balance, I have to give a debit. Okay, not okay. Now, who's Sham? Sham is customer from whom I have to receive money. So he's debtor. Technically, debtor. Debtor is what? Asset. Asset is what balance? Debit balance. Now here, he is buying the goods from me, or am I selling the goods to him, or we receiving the money from him? We are receiving the money from him. Yes or no? When I receive the money from him, his balance, what he has to pay, will be more or less now. Earlier, he has to pay me 30,000. In that, 20,000 paid Aprina, balance is how much? 10,000. So when I receive money from Sham, his balance from 30 became 10. Upon his balance got reduced. To increase debit means to decrease, it should be credit. Got it, not got it. To increase Sham ka balance, I gave debit. Now when his balance is decreasing, I have to give a credit. Got it, not got it. So in Sham's account, I have to come back. In Sham's account, I have to come back. And to reduce his balance, to decrease his balance, I have to give credit. Because debit will increase his balance. Credit will decrease his balance. How much should I reduce by? 20,000. Only if I give credit to his account, the balance will become how much? Balance will become positive 10,000. Means what? This is the balance money which Sham is yet to pay me. This is the balance money which I'm yet to receive from Sham. Got it? Not got it? Hell no. So debit is acting here as plus to increase the balance. Credit is acting as minus to decrease his balance. So ultimately, debit and credit is nothing but plus and minus. It's all about addition and subtraction. So in the ninth transaction, Sham is asset. And when he's giving the money to us, my asset balance reduces. 20,000 credited. Cash is asset. When I receive the money, my asset balance increases. Hence, cash should be debited. Got it, not got it. Last one. cash paid to Mahesh. Why the hell are you paying money to Mahesh? Because in the sixth transaction, you purchased goods from Mahesh. Yes or no? So if I go to Mahesh account, what did you do earlier? Mahesh, what did you do earlier? Mahesh's creditor means liability. To create liability, to increase liability, you gave a credit. About to create the account, you gave credit. The moment you credited Mahesh account, it got added, increased by how much? 30,000. Yes or no? Now, Mahesh is paying the cash 10,000. Out of how much? 30 is paying 10. Up his balance has to reduce. So, to increase his balance, what happened? Online? One second, people. The Zoom streaming got stopped. 1 second. Guys, where did you listen last to me? Sorry? 10th question, where till where did you listen? Okay, from beginning. Okay. So you had technical problems. I'm repeating one more time. Listen. Shh. Cash paid to Mahesh. Now, this 10th transaction is connected to 6th transaction. In the 6th transaction, what happened? We purchased goods from Mahesh. Who is Mahesh? Mahesh is a supplier who supplied the goods to us. Technically, is called as creditor. So creditor is that person from whom we have purchased the goods on credit. So this we have to pay money in future to the supplier, to the creditor, to Mahesh. We have to pay the money in future. Hence, it is liability. And to create the liability, in the past you gave credit. So the moment you gave the credit, we have to pay so much money. That is what it means. Yes or no? So credit is done the job of increasing the liability. Yes or no? So if credit is increasing liability means to decrease liability, what should I do now? I have to give a debit now. The moment I debit, Mahesh ka balance will decrease by how much? By the money he's paying. How much money is paying? 10,000. So out of 30, if 10 is paid, what is the balance? 20,000. Got it? Not got it. So credit here means for liability increase, and debit means decrease in liability. Credit means increase in liability. Debit means decrease in liability. Got it? Not got it. Credit will increase liability. Debit will decrease liability. So here, Mahesh ka account I have to reduce. So Mahesh is creditor. Creditor is liability. Since Mahesh is paying the money, since we are making the payment to Mahesh, I said ulta. Sorry. Since we are paying money to Mahesh, the liability is reducing. Yes or no? Since we are paying money to Mahesh, I'm so sorry. I think I said ulta. Again, I'm telling you. We purchase goods worth 30,000 from Mahesh. So how much should we supposed to pay? How much are we supposed to pay? 30 we are supposed to pay. So our liability is 30,000. Out of that, how much is paid? 10 is paid. So when the liability increases credit, now I've paid 10,000. Now my liability should decrease to 20. So decrease by how much? 10,000. To decrease what I'm supposed to do? Minus. But in account plus and minus, we cannot use it. So how will I decrease it? By giving debit. Because if I do credit here, it will increase the balance. To reduce the balance, I have to give a debit. So I made the payment and the liability is reducing. So Mahesh is creditor. Creditor is liability. Upon I making the payment to him, my liability reduces. Hence, to decrease the liability, I have to give a debit. So Mahesh is liability. And upon making the payment to him, his liability, that is our liability towards him, reduces by 10,000. Got it? Not got it? Likewise, if I make the payment to him, my cash, that is asset, decreases. If I keep on making the payment to him, my cash balance will decrease. To decrease the asset, I have to give a credit. To decrease the asset, I have to give a credit. Got it? Not got it? Online people, comfortable? இன்னைக்கு ஒரு கிளாஸ்ல மாடர்ன் ரூல் இஃப் யூ even understand 20%, I'm happy. Because remaining 80%, you'll understand in next 5 to 6 classes. Next 5 to 6 classes, I'm going to do more questions based on modern rule. 80% clarity will come there. Okay, not okay. Now, can we do illustration 4? With this, we'll wind up. Illustration 4 says that on which side will the increase in the following accounts will be recorded? So this entire question is based on increase, not decrease. If building account increases, will I debit or credit? If creditors increase or decrease, if the creditors increase, will I debit or credit? Is what they're asking. புரிஞ்சுதா? So if the following accounts are increased, then will you debit or credit is the question. Also mention the nature of accounts on the basis of modern classification. Okay, wow. So tell me people, building is what classification? Building is asset. If building increases, should I debit or credit? Building is asset. Asset is debit balance. To increase asset, give a debit. Debit, asset. Oh, you saw the answer and told, eh? Donkey people. मेरी गलती है. हाँ, वेरी गुड. बता बता बर मेरे को ही बोलना तू. Purchase account. Purchase account. It is expenditure. Classification expenditure. Expenditure is what balance? Debit balance. To increase expenditure, debit. So it is which one? Fourth one. Debit expenses. Okay, not okay. Next answer பார்த்துட்டீங்களா? Gurman. Proprietor. யார் அது? Who is he? Owner. Natural personal account. அப்போ what classification? Capital. Owner is capital classification. If capital increases, credit, because capital is credit balance. To increase capital, credit. To increase capital, credit. So credit capital. Got it, not got it. Next, which one? Creditor. 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 Who's creditor? Customer, sir. Creditor is customer. Tell no. He's supplier from whom we have purchased the goods on credit. Means we have to pay the money to him in future. Upon a creditor is a liability. So if liability increases, I have to give a credit. So liability and increases credit. Any problem so far? Next is carriage inward. Carriage inward. Carriage inward. Carriage means transportation charges. Inward, outward. What is meant by it? I have not told you. I will teach you in the final accounts. Got it, not got it. இப்போதைக்கு சொல்ல போனா ஒண்ணு இல்ல. When I purchase the goods, I pay transportation charges, no? That transportation charge is called as carriage inward. I'm buying goods from Delhi. From Delhi, all the way the goods has come to Coimbatore, no? From Delhi it has to come to Coimbatore. Other transportation cost I am paying. I am paying the transportation cost for the goods that is coming inside the business. Hence it is called as carriage, means transportation charges for the goods that is coming inside the business. That is carriage inward. What is carriage outward? When I sell the goods, for example, I'm Girias. Now one customer has come and purchased AC from my shop. Now I'm delivering that AC to customer's place. Delivery charges I am bearing. Who am I? Shopkeeper. Girias, I'm bearing the expenses. So if I bear the transportation charges for the goods that is going outside the business for the sale product, that is called as carriage outward. So carriage inward is for purchases. Carriage outward is for sales. பொருள் வாங்கும் போது கட்டுற transportation cost is called as carriage inward. ஒரு பொருள் விற்கும் போது அதுக்கு மேல வர transportation cost is called as carriage outward. Got it, not got it. In business, both are expenditure. But accounting for this and this will be different in the final accounts. Got it, not got it. What is the treatment? Why is it different? I'll be able to tell you only when we do final accounts. Clear or not clear? So in total, carriage inward is my expenditure. So as per modern rule, what classification? It is expenditure classification. Expenses are what balance? Debit balance. To increase expenditure, debit. So expense and debit. Debit and expenses. Got it, not got it? Hell no.
Yes, sir.
Cash is liability, sir. It is asset. To increase asset, debit. Debit and asset. Now, rent received. Now listen to very carefully. You will come across two terms. One is rent received. Second is rent, donkey fellow, no, earned. One is rent received, second is rent earned. Can you please tell me the difference? Both are same. Wrong. Both are different. Oh my God. Crazy, sir. Huh? Very good. Clap for him. Rent received means income earned. I've earned the rental income plus money received. So when I say rent received means income earned and money also received. Got it, not got it? Tell me no. Today is 2nd July. Today is 2nd July. Today is 2nd July. I'm supposed to pay the rent. I'll pay tomorrow only. I'll pay the rent for this premises. To whom? Owner of the premises. As per owner, rent is earned or not earned? Because I enjoyed entire June month premises for classes. So I have an obligation to pay the money. So from the owner's point of view, rent is earned or not earned? Rent is earned. But did the owner receive money? No. Upper rent earned means income earned, but money not received. So from owner's point of view, since I have not paid the rent, for the owner it is rent earned so far. Means what? Rent earned means what? Income earned, paisa not received. So owner will receive this money when? Owner will receive this money when? In future. So rent earned becomes your asset. Got it, not got it? Tell no. Tell no. So in the exam, if you come across the term rent earned, interest earned, commission earned, what does it mean? It means that income is earned, paisa not received. When will I receive? In future. Anything that I receive in future is asset. To create asset, I have to give a debit. To increase asset, I have to give a debit. Got it, not got it? On the other hand, the question tells you rent is received, apnina, money received means income earned. So here, this transaction has got two accounts. One is income aspect, second is cash aspect. Yes or no? So are they focusing on the cash part? No. They're focusing on rent received. Rent received means they're focusing on income part. Got it, not got it? This is little tricky to understand. See, rent received is a transaction. In every transaction, there are two accounts. One is rent income account. Second is cash account. So here, rent received means are they talking from the cash point of view or rent income point of view? Income point of view. They have not used anywhere the word cash. Apana, they're talking about income point of view. So here, rent received is what? Income, revenue. Revenue is what balance? Credit balance. To increase revenue, credit. So rent received is revenue and credit. Got it, not got it? Tell no. Similarly, I have interest earned here. Interest earned. Same concept. Instead of rent, it is interest. Instead of rent, it is interest. Same concept. Interest. What is that telling? What is it they're telling? Interest earned means what? Interest income is earned, but money not received. When will I receive it? In future. Anything that is in future is asset. To increase asset, debit. So your interest earned is debit asset. Got it, not got it? Tell no. Clear or not clear? Online people, clear or not clear?
Yes, sir.
The same way, next is interest. Again, two part. One is interest paid. Second is interest payable. Payable. So this is from whose point of view? Expenditure point of view. This interest was from whose point of view? Income viewpoint. Got it, not got it? So interest received is income. Interest paid is what? Interest paid is what? It is expenditure. Means what? Expense incurred. But, and paid. Expense incurred plus cash paid. So today, if I had paid the rent apnina, rent paid becomes my expenditure. Got it, not got it? But today, did I pay the rent? No. As on today, rent is payable. Rent is payable. So if rent is payable, interest is payable means when will I pay? In future. Anything that I pay in future is liability. So rent payable means expense incurred. But amount not paid. When will I pay? When will I pay this money? In future. Anything that I pay in future is liability. Apana interest payable. Payable means what? Yet to pay is a liability. So if you see your interest payable, 8th one, it's a liability. Got it, not got it. Liability to increase, what will I do? Give a credit. Clear or not clear? Online people, tell me no.
Yes, sir. Clear.
Now,
Yes.
interest earned is there, no? Interest earned. There is another name for this. Accrued interest. Accrued interest. Both are same. Both are same. So interest earned and accrued interest both are same. Listen now. I have to do a lot of discussion on these items. In depth pannu. This is not the right time to discuss. I'm only discussing the classification. What is meant by interest received? What is meant by interest earned? What is accrued interest? What is meant by earned? What is meant by incurred? What is meant by payable? In depth, I have to discuss. I'll discuss in two places. One in journal, second in final accounts. Because this is complicated. And this has got the carry forward impact in the 12th standard also. So today I've not explained the meaning. Today I'm just helping you with the classification. Because if I start explaining this, it'll take one entire class. Only to explain what is prepaid expenses, outstanding expenses, accrued income, and unearned income. To explain these four, I'll take two classes rather. In depth, we'll discuss when the right time comes. Today, I'm only discussing the classification. So it might sound that you're by-hearting. I'm okay with it. Today, let it be like by-hearting, but give me 5 to 10 classes. In that, you'll get a clarity on what is meant by rent received, what is payable, what is accrued, what is earned. Give me 7, 5, 6, 7 classes. In that, you'll get clarity. Okay, not okay. Bank overdraft means what? I've taken loan from bank. If I've taken loan from bank, it's my responsibility to pay the money in future. Anything that I pay in future is liability. To increase liability, credit. So bank OD, liability, credit. Debtor increases. Debtor is what classification? Asset classification. To increase asset, debit. Debit asset. Accrued commission ka another name. Accrued commission ka another name. Commission earned. Commission earned. One more name is there. Commission receivable. So 3 names are there for this. Make a note. Interest earned or accrued interest, or what did I say? Interest receivable. These are the 3 different alternative names. All the 3 means the same. Means what? Income is earned, interest earned, commission earned, rent earned, but money not received. When will I receive? In future. Anything that I receive in future is asset. So accrued commission is a commission amount which I've earned it, but paisa not received. When will I receive? In future. Hence it is asset. And to increase asset, debit. Got it, not got it.
Yes, sir.
For interest payable, another name is outstanding interest. Outstanding interest. Okay, not okay. Or interest expense incurred. This is another name. Interest incurred. No need expense. Put the word incurred. Interest incurred. So 3 names are there. Interest payable, outstanding interest, interest incurred. These are the 3 alternative names. All 3 means what? Expenses incurred. Means what? I have an obligation to pay the money, but I have not paid the money. When will I pay? In future. Anything that I pay in future is liability. Got it? Interest earned, we already discussed. Everything over? Interest earned is debit asset. Interest earned is receivable. When will I receive? In future. Hence it is asset. To increase asset, debit. Any problem so far? So today's class, even if you have 20% comfortability, I'm okay with it. Below 20%, I'm a little worried. So are you comfortable with today's class to the extent of 20%? More than 20, much better. But at least 20% minimum should be there. Anybody who feel that today's class, I'm comfortable less than 20%? Less than 20%. Anybody? Switch on the videos, all of you know, online people. I cannot see you. Comfortable? 20% today? 20% okay, va? 20% okay, va? Now, listen. I want you to take question 6 as homework. I'll do it. But what I'm thinking is, now game of debit credit over. Too much boring it is. What I'm thinking is, next class we'll start journal. Because in journal also same question. Same debit credit. But we'll do the debit credit with the proper formatting. See, in the question on can I include in the journal topic and do proper debit and credit itself? See, ultimately we are deciding what to debit and credit. This structure, I'll do it in a proper manner itself, I'm telling, in the form of journal itself. The sixth question, you do it as homework, but I'll also do it in the journal topic. When I come to journal topic, this question I'll do it. Okay. Which means technically, today we're done with the topic of rules of debit and credit. Now you'll be wondering, sir, after this, there's something called as balancing of an account. Based on this question also is there, sir. Seventh one, how to do it. This is nothing but ledger. So when I come to ledger, this will automatically get covered. Clear or not clear? If I take ledger here, it doesn't make sense. First, we have to make the journal strong. In the accounting process, what comes first? Journal comes. We have to go in the proper order. What is order? Identification of BFT, BFE done. Money measurement done. Now we are in what stage? Recording stage. So in the recording stage, we're deciding what rule, how to apply. Once that is done, what is the next step? Recording to journal and subsidiary book. So subsidiary book also I'll not do first. What I'll do is I'll do journal. Then I'll come back to ledger. From ledger, we'll prepare trial balance. Till this will complete. Then we'll decide what to do again. Okay, not okay. So another 15 classes, I'm telling you, another 10 to 15 classes, not 10, 15 classes, your journal and ledger will get completed. Don't think that same questions we are going to do in the 10 classes. No. Your first class is going to be easy, journal. From second class onwards, your marathon will start. Challenging part will start. In that, lot of new topics will come into picture. What is trade discount? What is cash discount? What is rebate? What is entry for bad debt? What is the entry for goods destroyed by fire? What is outstanding expenses, prepaid expenses? All the masala will start coming in. And if this 10 classes you're not thorough, it's my open challenge. Entire 11th you will struggle, including 12th. So next 10 to 15 classes are very, 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 very crucial, which will set a strong base for 10th also and 12th also. Because in 12th standard, the first 2 volume is fully journal, fully ledger. And the base of that is what I'm going to put now. Clear or not clear? So ensure that next 15 classes, you are not taking any leave. Please be present inside the class. Am I loud and clear? Okay, fantastic. So if any of your friends wants to join, this is the time they can hop in. Once I complete journal, ledger and trial balance, even if they want to come and join, I will give admission. I have no problem. But without basics, if they come and sit at the advanced level topic, they are screwed. So one last time, keep your friends informed about the classes. They want to join, this is a last opportunity. Once this 15 classes are gone by, I'll still give admission if they want, but they will struggle. Right? So on that positive note, I'm summing up the class here, people. That's all from my side for this session. We're meeting next when? Saturday. Saturday, 50-50. Chances are there. Classes may there or may not be there. I'll keep you updated. If Saturday we're meeting, then Sunday will not meet. If Saturday we're not meeting, Sunday will meet. Okay, wow. And we're starting with the next chapter, which is journal. Right? So guys, that's all from my side for this session. I will see you on the next class. Until then, bye-bye. See you. Take care. Thank you so much. Thank you. Thank you. Thank you. Thank you.